I'm Dan Fitzpatrick, stockmarketmentor.com, and this is my 3 stocks I saw on TV video. Look, every day there's stocks in the news, and I pick 3 of them that I think are the most important for you to be looking at. Today we're going to look at Google first. Okay, company reported, and I guess we call it Alphabet now, but I'll be calling it Google for years until they change the ticker. Google reported earnings that absolutely blew estimates away, kind of similar to Mark Zuckerberg. And Facebook, the stock's gapping up above $800. Now, here's the deal. When this happened to Facebook, and there's only so many parallels you can draw, but you can draw a few of them. Okay, Facebook, this was their post-earnings move right up to resistance. So you don't want to buy that because it's up against resistance. You need to sell it. Instead, this is what happened over the next few days, right? Okay, so with Google, you're going to get like a similar dynamic at least tomorrow. Now, I have absolutely no idea whether the stock's going to pull back or not. But here's what I can tell you. I'm not the only guy that's noticed this kind of thing. This is not brilliant technical analysis on my part. It's just looking at a couple of charts. And that's really important for you to know, because what I see, everybody else really sees too. And my suggestion would be this: don't fade that move. Don't be looking at this saying, oh, I'm going to sell into this strength. Maybe that's something to do in the short term, but keep in mind that short term could be 5 minutes. It could be 5 days. It could be 5 weeks. I'm not a Googleonian. I don't have a position in this stock, but I'm going to be watching this stock tomorrow. And if it stays above 800 after the first 5 or 10 minutes of trading, it's going to stay above 800 for a while, and I'll be in. So you may want to check that out. Also, Apple. The big news was, Google went one way, Apple's going the other way as far as the most valuable company in the U.S. markets. And that was kind of the big news is, hey, they've overtaken Apple. Frankly, this was only a matter of time. So I wouldn't, I'm not suggesting a pairs trade with, short Apple and buy Google or vice versa. I'm just saying this. I've said it before for many points, and I'll say it again. If you're holding Apple, I'm not really sure why you're doing that. You must be hungry and you like the Beatles. But the stock's trending lower. There's no foreseeable catalyst. And when I say foreseeable, I mean, the next month or whatever. I just don't see a catalyst that's going to bring people into Apple. It has had a monster move over the last few years. Big money managers, funds have been lightening up on this stock. They began lightening up right up here at the top, which is what smart money does, which is why tops are tops. When the big money is done buying and it's actually starting to sell, who is it selling to? It's selling to the poorly capitalized traders, the little money. And why is it little money? Because little money always buys at the top. If it didn't, it wouldn't be little money. It would be big money. And this is one of the truer things that you're ever going to hear. You don't want to be buying yesterday's superstar after it's topped out and is moving lower. That's, we've seen that movie before, and it doesn't work. Don't let Apple work you. You just don't want to go there. Now, the other stock I want to look at is Chipotle. They report earnings tomorrow after the bell. They got absolutely trashed on this whole E. coli thing, which I get. Not E. coli. I've never had that. But the stock has taken oh my gosh, the jokes are everywhere. The stock has taken a big dump because of this E. coli thing. Now it's rallied back. I have no idea what they're going to say. Apparently, the CDC is going to lift they're going to give it a clean bill of health. Okay, whatever. The CDC is always behind the curve. Guys, they use some of your money to build bike paths. Look it up. So I don't really care about them. This is what I care about. I care about the weekly chart. This is a stock. We know why it has been really moving down like it has. Look at McDonald's in the other direction. not bad. What would you rather have, a Big Mac or a barbacoa burrito? But what I think is happening here, this is kind of done going down. It's oversold. You probably see a bit of a move, a big move tomorrow after the bell. What I would suggest you do is stay here in the weekly time frame. Don't get caught up in this, because it's just too volatile. If you're a real nimble trader, that's great. But stick here in the weekly time frame. This stock is way overextended below the 200-day moving average. If it starts trading, say, above 480, you're probably going to see it continue to rebound. Just as a function of so much money coming out, it's time for new money to come in. So anyway, those are 3 stocks I wanted to cover. Hope these videos work for you, and I'll see you next time.